welcome to this very special panel discussion. We are, of course, doing a series of conversations with some of the biggest thought leaders culminating in the India Economic Conclave. Today, we're talking about the growth debate. My first question, and let's pick up on a news point that we've just received. 7.2% is the Q3 GDP that we've seen, and all likelihood is that we've passed the expectations, but all likelihood and all indicators are pointing to the fact that the year also could perhaps end out good. Mr. Karya, let me come to you first. What do you think maybe the one or two things that have really been holding India in good stead over the past couple of quarters, and you think will be the driving factors as far as growth is concerned over the year?
Doubtless, I think the government spend has gone up, especially on infrastructure. And with the availability of cash now in the markets, the spend has gone up, plus the year-end push is always there. So traditionally, always this last quarter has been a growth much higher than the previous 3 quarters. This quarter is also no different from the last earlier part of the year. And this is something which I think will help in giving a momentum for the coming year. Though traditionally, I think, and what we see from the world economy, it's stated that 2018 is going to be a tough year for the worldwide economy. We are seeing a lot of headwinds appearing, and let's hope that India is not too impacted by that.
Okay, Mr. Kambata, I want to come to you on that. And Vipin, if you can also possibly respond to what Mr. Karya is just saying. He says Q3, of course, is a quarter that is traditionally better than most other quarters. We see that happening for companies as well. Do you think it's that? Do you think that perhaps India is finally in a stage where we're managing to continue the growth momentum? We have shaken off what perhaps has happened over the last year and a half, and we're in a phase of growth consolidation?
See, I think we have to look from this clear thing that there was a little bit of a slowdown because of demo and GST, and I was expecting in fact a higher growth because of that slowdown which was evident of destocking and whatnot, because I think a lot of things have fallen in place by then. So my personal feeling is this is slightly less. It should have been more, because I believe India's potential is much more than this, and possibly later as we go I'll probably tell you what is really affecting the Indian economy and why we are not growing at this rate that we should be growing. I honestly feel that, and I think we should all focus on that much more today than seeing what has happened, how we can do, and what are the lost opportunities. So I would say
I agree. I think the year 2017, especially since demonetization and then GST, these were triggers for large scale formalization and digitization of the economy. I think it is by no means complete, but I think they have played a very significant role in triggering this growth of India as a digital economy, which will be not just one of the biggest, if not the biggest in the next few years, but also one of the most innovative and open digital economies all over the world. I mean, because if you see, China it's pretty much closed for anybody to participate in as far as digital and fintech is concerned. And US operates on its own terms. So India is really the only large digital economy where we expect a lot of investments, where we expect a lot of growth, and then the amount of innovation that has been happening on back of three things. One is Aadhaar, which has managed to create a digital identity of about 1 billion Indians, and then UPI, which is probably the only mobile payments platform of this scale anywhere in the world, and third is really the kind of innovation that is happening in the market on back of these two which are acting as a foundation. So we see that and specifically also the data costs coming down on the smartphone significantly since the entry of Jio. That has opened up the market. India is one of the largest video consumption markets in the world now. So I think the full impact of digitization in the Indian economy, both for consumers as well as for businesses, and especially small businesses, is yet to happen. And I think all this growth is, while it is great, but really when the full impact of digitization happens, I think it should have a huge impact, take us to double-digit growth rate.
Mr. Kambata was talking about demonetization, and I want to come to you on that, Bipin. We've had about a year and a half of having seen how demonetization has played out. We've seen a lot of commentary, a lot of confusion, if I can call it that, as far as, you know, what's really happening with Aadhaar. We were talking, of course, about also the Jan Dhan scheme. It seems like a lot of this is still work in progress. That said, do you think that we've managed to factor in all of that, and that going forward now into the new financial year that's coming up, it's going to be smooth sailing, that we've managed to iron out the kinks?
You know, demonetization played a very strong role in creating awareness and education about digital. You know, India has always been a very, very high cash economy, and even today, you know, obviously a lot of cash has come back since demonetization, but the number of people and the amount of transactions that are happening on various digital platforms, including wallets, including cards, including UPI, are up multiple levels since November of 2016. So all that tells you that, you know, it has had an effect. Yes, you know, we can talk about how it could have been executed and all, but at the end of the day, it is taking the country in the right direction. The second aspect actually is also around Aadhaar. I know there is a lot of controversy around Aadhaar as well, but today, you know, if you look at RBI, it asks everybody to do a, you know, KYC of a customer. Do we really believe that financial services can be delivered to a billion Indians on the back of you know, paper-based KYC? So really, we need you know, something like Aadhaar. It may not be foolproof, and it may need fixing, you know, in various different ways. And I'm nobody to comment on that, but I think it will play, and it is already playing a pivotal role in the growth of financial services. And ultimately, see, if you have digitization, then, you know, that's when credit will happen, both on the consumer side as well as on the businesses side. You know, we've just recently started this business. I can tell you that the way the traditional institutions offer credit is very, very conservative, and they leave out, you know, 80% of the population, both on the customer side as well as business side, out of access to credit. And I think if you have to solve that, we have to solve for identity, which is what Aadhaar does. We have to solve for payments, which is what UPI does. And I think I definitely feel that we are in the right direction here. You know, the combination of these factors will result into consumers spending more, small businesses spending more, investing more, and that is where the push towards real high growth will come from.
Do you have anything you want to add to that?
I agree with both the gentlemen when they say that the growth rates are lower than what it should have been. It could also be that these growth rates are because what was traditionally unreported business now with digitization has come to the fore, and therefore it's being counted in your GDP growth. And going further with the further fillip to the digitization and official so-called business, we should see an impetus in growth rate. Even the government and the economic advisors to the government had said that they expect that at least a minimum 2% point would be added to the GDP because once the full impact of the GST sinks in because of the unreported economy. And I also feel that we need to talk about what's going to be further. You know, what's past is past, and the demonetization or the GST, and mind well that the GST is yet known to be a complicated rule world over, and you know, maybe a lot more simplification would have to be done for this. And I hope the government is aware of this and is moving towards this.
Mr. Kambata, we started this panel by talking about the good news that's come in as far as GDP is concerned. But I want to drill down further and talk about investment as well as consumption. Investment is picking up, definitely, but private consumption still continues to lag just a little bit.
I definitely believe consumption is not yet peaked up, and I would especially like to refer to rural and urban consumption separately. I believe rural consumption can really drive the economy, but that is not happening for various reasons. Maybe all the money which the government is spending in rural areas is not actually going there, or maybe the farm, the agriculture GDP itself is not growing, and that is really having effect on the agri communities. As even as the urban consumption story is growing, it is not growing as much as it should. But I said earlier possibly that we have lost it, the big picture. The big picture is the main issue is demo is behind us, GST is behind us. But this government has shown an appetite for reforms. So I believe first we really need to work and unshackle the economy. We should see real robust growth.
Given everything that's happened in the banking space, particularly the PSU, the public sector, undertaking the public sector space, my question to you is, has there been a negative impact in terms of sentiment for the broader industry?
The current state of affairs with regards to the PSU banks has created a very negative environment in terms of banks vis-a-vis customers, and especially the MSME segment is badly hit because as usual they are the first ones to suffer. The large industries have got plenty of access to money, even they can go in for global borrowings, etc., which the smaller segment does not have access to. And therefore, it's a very tough time for them, and they need to keep their head up above the water, because even if their sales dip, their bank comes and hits at them hard. Sure. I don't think that as a global player, the small blip in the banking system has really impacted global sentiment. But within the banking system, the outlook towards the industry, the outlook towards the consumer, the outlook towards the customer has been badly hit. And the bankers are resorting to extreme measures in terms of safety. Nobody is willing to take any kind of position on this. The private sector banks were a lot more bullish a few months ago, but now it's turned the other way around. And they are being absolutely hawkish on any kind of credit or any kind of even a small delay in any kind of payment, and the amount of paperwork that they are asking for is stupendous. Sure. It's self-defeating. So in fact, though one does agree that this blip or this what happened in the PSU banking system should not have happened, but we need to accept that these kind of things will happen in a country of this size. And there are people who are smart enough to take care of and bend the rules wherever required, or there is crony capitalism happening, though we might deny it. The smaller companies getting more hit is absolutely spot on. And these MSMEs are going to find it difficult to recover from this problem of credit, because people are not paying them, their interest costs are rising, their margins are under pressure. Sure. Commodity prices have gone up. Our industry is suffering from a similar kind of situation, and compounded with the fact is that the power sector is also been given instructions not to lend to loss-making utilities. Sure. And that means the utilities have to supply electricity. If you are in say Uttar Pradesh or in Bihar, or some of these loss-making utilities have to supply electricity to sure. the consumer. They can't walk out of it, but they won't get money. So who suffers ultimately? It is the manufacturer, the supplier of the products to them suffer. And this kind of suffering is going to get accelerated. So that means people are going to get locked for capital. So even if we talk of an increase in consumption, even if there is a demand in India, my fear is that the capital, because it is locked up, and if you see the cash to cash ratio has been deteriorating over the last 1 year, it's deteriorated by nearly 4%.
We are running out of time, unfortunately, on this panel. You cannot see enough when it comes to growth, when it comes to the economy in India. My first question to you for the closing comments, Mr. Khambata, and I really want to talk about the big factor as far as the consumption story in India is concerned. which is going to be the elections that's going to impact all sectors, all industries. But my question to you is what perhaps are some of the biggest changes we're going to see as we are counting down to the general elections coming up, and perhaps what impact we're likely to see as far as India's growth story is concerned?
I generally believe politics is not good news for economy and vice versa. So if you ask me, it's an election year, I am worried because economy will then go down the drain more further. And we will see a little bit of a populistic all measures, and which will further, what I call, there will be loan waivers and there will be whatnot, and which will further make our economy weaker. That's what my belief is. And as regards your question on consumption is concerned, I think India has the potential of a natural consumption. But sometimes without this artificial sort of things, we are taking consumption down. Like I'll give you an example, just for an example, that in a lot of food products, post GST, the taxation has gone up. The products were not in taxation bracket at all, but the tax has gone up from, let us say, 5% to something like 18%. So obviously the consumer price for these products has gone up, so the customer is not buying the product.
Bipin, very quickly, we are talking at a point when we've seen that massive data leak that has happened globally. My question to you is, as we're moving to the next phase of growth here in India, how do we ensure data security, especially given that we're looking at a massive fintech, a massive cashless society push here in India?
Yes, absolutely. I think, as we grow significantly on adoption of smartphones and the amount of data that is available via smartphone apps and the usage of transaction data for payments and financial services, I think there is a need to create a strong regime of data security and privacy in India. Unfortunately, I've been talking about it for more than a year, especially since demonetization, but there is very little that has been done about it. I don't think there is any specific regulation which has been created or any guidelines have been created. There are some weak, requirements that your data needs to be stored in India, but it doesn't restrict you how the data moves, for example, from within India to any country outside India, whether it is China or any other country. And today, as you know, there are a lot of foreign players operating either directly or through their investors or investments or subsidiaries in India. And I think it's a huge risk if it happens with respect to financial data, financial services, then we are in for a huge shock, because this data can be misused and abused in a very big way. And this data, once lost, it can't be recovered very easily. So I think that, at the highest level, there is a need to focus on this, and then there is a need to also create proper compliances so that companies will actually meet up to the standard that is being created.
We've said China quite a bit here on the panel, so I'm going to let you have the last word. My brief question to you is, even as we're in the middle of what is possibly turning out to be a global trade and a global tariff war really between the US and China, the impact perhaps India could see?
I think it would be a positive impact for India perhaps. US has triggered off something which is a protectionism towards their economy, and since India is already having a very vast latent consumption industry, and the government is having a strong thrust towards Make in India, we could see and we could take protection behind such policies that the US has adopted for increasing their tariffs. We are having a very negative balance of trade position with China, and we could take the cover of such a position. And maybe going further, if the government is smart enough and we are able to leverage this in terms of the WTO and in terms of other bodies without sounding too protectionist towards our own economy, we could leverage this. The second part that the government could also do and should do is help the industry now with this kind of tariff protection that is there, help the industry with some kind of subsidies towards exports. And even if it need not be cash subsidies, but at least in terms of getting businesses across the world, through the commercial attaches and through the might of the government. And I am sure that they are looking to this kind of policy. this perhaps could directly help the Indian economy.
All right, gentlemen, Mr. Karya, Mr. Kambata, Bipin, thank you very much, gentlemen, for your time with us here on this panel discussion on ET Now.